What if I told you you could earn an 8% yield on Bitcoin? Yes, you heard that right, 8% on Bitcoin. No staking, no lending to third parties, just cold, hard yield. Sounds too good to be true? Well, MicroStrategy, or now better known as Strategy since they just rebranded, yes, the same company that made it their mission to buy up all the Bitcoin they can, just launched STRK, a brand new financial product that's making waves. But before you get too excited, let's take a step back, because with anything in the financial world, when something sounds too good to be true, there's always a catch. Now, some people are already calling STRK a brilliant move, but the realists, they're warning it could be the beginning of a dangerous financial game, one that could end in disaster. So let's have a look at what's really happening here. How is it possible that MicroStrategy can offer an 8% yield on an asset that doesn't generate yield? Is this sustainable, or is this just another financial trick that could end up blowing up in everyone's faces? Kind of reminds me of FTX. Every time Wall Street or big corporations get creative with a financial product, it usually ends in one of two ways: a massive windfall for insiders, or a brutal collapse that leaves retail investors holding the bag. Which one is it this time? Stick around, because I'm about to break this all down. So if you're not aware, here's what just happened. MicroStrategy just pulled off a major financial maneuver. They issued 7.3 million shares of a brand new financial instrument, Series A Perpetual Strike Preferred Stock, or STRK. Each share of STRK is being sold for $80, giving them $563 million in fresh capital. These shares come with an 8% annual yield, meaning that if you own STRK, you're promised regular payouts for just holding. Here's where things get really interesting though. MicroStrategy, at its discretion, can choose to pay you in cold hard cash or in MSTR stock. Think about that for a second. Wouldn't you want your returns in cash or Bitcoin? Of course, if MicroStrategy chooses to pay you out in stock, then you're not really getting yield in the traditional sense. You're just getting more exposure to their stock. MicroStrategy has been doubling down on Bitcoin for years. They put their entire corporate treasury in Bitcoin, issued debt to buy more, and now with STRK, they're basically creating yet another financial vehicle to stack even more sats. The official reason for STRK, the company states that the money raised will be used for general corporate purposes. But let's not kid ourselves. This is most likely a Bitcoin play. They're raising over $500 million, and a huge chunk is going straight back into Bitcoin. Sounds great, right? A company that believes in Bitcoin this much, what's not to love? Well, there's a big issue here. Bitcoin is not a cash flow generating asset. It doesn't pay dividends. It doesn't spit out interest payments. It's a store of value. Unlike traditional stocks, where companies make money from actual business operations like selling products, offering services, generating revenue, Bitcoin doesn't have an internal cash flow. So, if Bitcoin doesn't generate yield, how is STRK paying out 8%? MicroStrategy has two choices when it comes to paying out STRK holders. They can pay in MSTR stock, but if they start issuing dividends in stock instead of cash, they're essentially printing more shares out of thin air. And guess what? More shares is essentially inflation, which means existing MSTR shareholders see their stake diluted in the company over time. Or they can pay in cash. But where is that cash coming from? Cash payments means they're using money that could have gone towards buying more Bitcoin. So every dollar paid to STRK holders in cash is a dollar not being used to fuel their Bitcoin accumulation strategy. Either way, there's a trade-off, and neither of these options look sustainable in the long run. But let's not forget one important detail. MicroStrategy doesn't actually make that much money from its core business. They're not Apple, they're not Microsoft, they're not raking in billions in profits. Most of their balance sheet is just Bitcoin holdings and whatever cash they can scrounge up through stock sales or bond offerings. So if they're promising an 8% yield on STRK, but they're not generating significant revenue, where's the money really coming from? Well, here's the uncomfortable truth. To keep up with STRK payments, MicroStrategy might have to issue even more stock or sell off Bitcoin, which creates a Ponzi-like dynamic if not managed carefully. They're basically increasing their leverage, and you know how I feel about leverage, guys. Think about it, if they're paying STRK investors by issuing more shares, that means future obligations keep piling up. If they start selling Bitcoin to cover payouts, they're draining the very asset that's supposedly backing their strategy in the first place. It's a loop that could spiral out of control really fast. So if you're a MicroStrategy holder or you want to buy STRK, think about it for a second. Is this really sustainable? If MicroStrategy can't generate enough cash flow to support this 8% yield organically, then they're just shifting money around in a way that looks profitable, but could actually be a house of cards waiting to collapse. We already talked about how MicroStrategy has two ways to pay out STRK holders, cash or stock. But let's be real, if history has taught us anything, companies like this love printing shares over handing out real money. So what happens when they start paying STRK dividends in MSTR stock? Boom, dilution. More shares equal your piece of the pie shrinks. The company might still be worth the same overall, but each share gets less valuable because there are simply more of them in circulation. It's basic economics 101. Right now, STRK converts a rate of 0.1 MSTR per STRK, meaning that every 10 STRK shares can be flipped into a full share of MicroStrategy common stock. But there's another catch. The rate can change. They have the ability to tweak the conversion rate, which means they could squeeze existing shareholders even harder over time. And if they decide to dump all their converted shares all at once, you're looking at a flood of new MSTR stock hitting the market, dragging the price down even further. Tell me, does this sound like a strong, sustainable system, or does it sound like they're playing a dangerous game of stock dilution just to keep the money printer running? And you're probably thinking, but Toby, what if they just pay dividends in cash instead of shares? Well, that is where things get even worse. And let's be honest, MicroStrategy's entire mission at this point is buying more Bitcoin. That's what keeps MSTR stock propped up. The whole reason people even care about Michael Saylor's company is because they're this relentless Bitcoin buying machine. So let's do some quick math. 8% on $563 million is equal to about $45 million per year in payouts. If they choose to pay that in cash, that's $45 million not going into Bitcoin. That means less bullish momentum, less accumulation, and less confidence in MicroStrategies' whole strategy. That's the whole thing the business is based on, guys. Bitcoiners love Saylor because he's the biggest, loudest Bitcoin buyer on the planet. But if he suddenly has to choose between paying STRK holders or stacking sats, well, let's just say the entire narrative around MicroStrategy could start unraveling really fast. So let's go over that again. 1, if MicroStrategy keeps issuing stock to pay STRK holders, the dilution gets worse. Number 2, if they keep paying in cash, they weaken their Bitcoin buying power. Number 3, if they sell Bitcoin to cover payments, they're sacrificing their own treasury to keep this thing alive. It's like a snowball rolling downhill. Once it starts, this could be impossible to stop. We might be looking at the next FTX here, guys. And we need to think about what happens if the market cools down and Bitcoin doesn't give them their insane gains that they're expecting. What if MSTR stock starts tanking because investors realize they're in an endless cycle of dilution and stock manipulation? Well, folks, that's where things start getting really bad. Saylor's Maxis thinks STRK might look like a genius move right now, but in the long run, this could easily turn into one of the most reckless financial engineering plays we've seen in years. Saylor has a history of it, so don't say I didn't warn you. And trust me, we've seen plenty of those before. So the real question is, how much longer can they keep this up before the cracks start showing? So guys, let's take a look at how things could actually go wrong, and trust me, there's a lot. Let's start with the biggest elephant in the room. It's Bitcoin's volatility. MicroStrategy's entire playbook revolves around leveraging BTC, and if you know anything about leverage, you know it works great when prices are boring or going up. But it's brutal when prices start to crash. I mean, think about it. Right now, MicroStrategy is offering an 8% fixed yield on STRK. That means STRK holders expect to get paid no matter what. In a bull run, bear market, it doesn't matter. Those yields are being promised. But if Bitcoin's price plummets, well, what happens? MicroStrategy suddenly finds itself in a tight spot. If they don't have enough cash to cover STRK dividends, they're left with 2 terrible options. Number 1, sell Bitcoin, which completely contradicts their entire corporate strategy. Number 2, issue more stock, further diluting their shareholders and risking a total collapse in confidence. And if that starts happening, you better believe investors will see the writing on the wall. So what happens next? A vicious cycle. Bitcoin crashes, MSTR stock crashes, they're forced to sell Bitcoin or print more shares. Are you seeing the problem here? It's the classic leverage trap, and once you're in, there's really no easy way out. Right now, MicroStrategy is basically playing the role of Bitcoin's biggest corporate evangelist. Saylor has built his entire reputation on buying Bitcoin aggressively, and the market has rewarded him for it. But let's ask one simple question. What happens if they suddenly stop? Let's say STRK cash obligations start piling up and they can't afford to keep adding Bitcoin to their balance sheet. suddenly the whole narrative around MicroStrategy falls apart. If they stop buying Bitcoin to cover STRK payments, that story is over. Investors will start jumping ship because the entire reason for holding MSTR stock disappears. And once that happens, confidence is gone. You think Bitcoin maxis are going to stick around once they realize MicroStrategy is prioritizing dividends over stacking sats? Not a chance. The real maxis only self-custody Bitcoin anyways. This is the part that no one is talking about, but it might be the biggest threat of all. STRK holders can convert their shares into MSTR stock whenever they want. That means at any moment you could see a flood of newly minted MSTR stock hit the market. Now, what happens if Bitcoin isn't skyrocketing at the time? What happens if STRK holders look around and think, I'd rather dump these shares now before things can get worse? After all, can MicroStrategy really sustain these 8% yields? Well, folks, that's when things start spiraling. STRK holders rush to convert their shares into MSTR stock, and a massive supply of new shares floods the market. MSTR stock price tanks due to oversupply. This makes STRK conversions even more appealing because nobody wants to be holding STRK when the MSTR is still dropping. And the worst part, this isn't just speculation. It's exactly what we've seen happen in the past financial disasters. Let me know what you think in the comments below, because now we're going to talk about what could actually go right. Okay, so I'm being a little pro sailor here. All right, we've torn STRK apart, so I don't get hate from the sailor cult. What if this actually works? If Bitcoin keeps rising, if MicroStrategy keeps executing, and if investors keep believing in this vision, then STRK could actually turn into one of the biggest financial moves in recent history. Why? Because at the end of the day, STRK is a leveraged bet on Bitcoin's long-term success. If Bitcoin goes up, MicroStrategy's balance sheet becomes stronger, which makes MSTR stock more valuable. That makes STRK a more attractive investment, which means higher demand. And suddenly, instead of a dilution crisis, you have a compounding effect of bullish momentum. It's a high-risk, high-reward play. But if it goes right, MicroStrategy becomes the ultimate Bitcoin juggernaut. And remember, Saylor has bet his entire reputation on this. But also, let's explore the idea of institutional adoption. A lot of traditional investors want exposure to Bitcoin, but they don't want to deal with their private keys, wallets, or on-chain risk. They also want yield because in their world, assets should generate income. STRK basically solves both of these problems. Traditional investors who can't hold Bitcoin directly might jump into STRK instead. They get Bitcoin exposure through MicroStrategy's holdings, and on top of that, they get an 8% yield, which no other Bitcoin investment offers. If STRK attracts major capital from hedge funds, pension funds, or even sovereign wealth funds, this becomes a major Bitcoin on-ramp. In a way, STRK is like a Bitcoin-backed dividend stock, a concept that didn't exist before. If it works, other companies could copy this model, creating a wave of Bitcoin-backed financial instruments. Love him or hate him, Michael Saylor thinks he is playing 4D chess. MicroStrategy has found a way to raise $563 million in fresh capital without selling Bitcoin, which is impressive in some ways. They promise investors 8% return, higher than most bonds, safer than some altcoins, and they used the cash to buy more Bitcoin, reinforcing their market position. If Bitcoin goes up, MicroStrategy wins. If Bitcoin goes parabolic, STRK holders get both yield and stock price appreciation. So is this genius or insanity? Only time can answer that question, but I just wanted to leave you with this. Everyone is a genius in a bull market. Everybody thought Sam Bankman-Fried was the chosen one until he wasn't. These kind of leverage plays are fueled by a deep underlying greed. Buy spot, hold, it's that simple. I hope he goes down. This would be the freaking best thing. Kitty, 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 kitty. Hi, kitty. He's down there, kitty kid.